in listen-only mode.
Good afternoon, traders. This is how to identify technical levels. Now, before we begin, general advice warning: the following education session is not to be treated as personal advice. Forex CT provides general advice only that does not take into account your objectives, financial situation or needs. Trading FX and CFDs involves a substantial degree of risk and should only be undertaken with risk capital. Investors do not own or have rights to underlying assets. Now, all right, let's begin. So what we're doing here was we're doing what Trading Essentials doing, and identifying our own technical levels to trade around. So we're looking for levels of support, levels of resistance, and essentially where currencies are bouncing around, so we can learn to trade around those, set a stop loss, set our take profits around them. We'll just simply know where to enter and exit trades. Now, if we begin, we'll start with US dollar, Japanese yen. So if we zoom in, put it to the hourly. We're going to go in more and look on the 15-minute for a much shorter term approach. Now, what we can see is, go over here, grab the horizontal line. Is that right around about here? There's a bit of resistance. You can see here it's touching it, bouncing off, touching it, bouncing off, touching it, bouncing off, touching it, bouncing off. And so what you can do, even here it touched it again, bounced off. What you can do, this is more for short-term traders. I mean, each box is representing a 20 pip movement, so roughly about 40 pip corrections. Nothing huge, but nothing wrong with 40 pips. Look for levels like this and trade around them. So say you would notice here it bounced off it, here you would have noticed it, and here you would have definitely picked it up. So what you would have done here is place a sell position. That blue line there will act as a resistance. Place a sell, expecting it to move back down to where it did the previous times. You'd put your stop loss above it in case it did break through. Give it adequate breathing room without being excessively generous. And you'd put your take profit down to where you believe it's going to go to. So if the last time it dropped down anywhere around here, you might see your take profit around about here. Again, don't be too greedy on the take profit. Now, that's USD JPY. Another one that we can have a look at is pound yen. Now this one here is much more of a longer term trade, so we'll pop it out to the 4 hours. Now we can see here that, here this is Brexit here. We can see here that the pound yen had a nice rally. This is November, December, had a huge rally, got up to about 148.3, touched it, pushed right off. So we know that's a level of resistance. So again, that line, we just draw it in purely by doing this. Down a little bit. Cool. So when this came back up here 2 weeks ago or so, you would have seen it's about to hit that same level of resistance. So what you could do at that point is enter into a sell trade, stop loss above the resistance, so anywhere up here, and take profit. You'd put it down. Again, don't be too greedy on it. You can, move your take profit and stop loss with it as it comes down to try and pull as much as possible out of it. But you'd probably look, last time it dropped, got down to about here before it had a correction, so you might set a take profit anywhere around here. So could have nicked it now. You might still be sitting in it now for it to push down a bit more. But again, you're trading off this level up here. Then you see it bounced off in December, so a few months ago. Obviously quite a significant level. Hasn't been broken since Brexit. And then that would have been a great opportunity to re-enter that particular trade. Now, AUD USD. Let's have a look at this. So Aussie US, iron ore prices were falling, start of May. So the Aussie obviously lost a bit of value, dropped down, came down to this particular point here, bounced around a bit, pushed back up, and then came down and touched that same level again. So you can imagine there's a level of support that's been created here. So this here is going to be a support level. You can see it's bounced off it again, started to push up. And when you see it start to push up, that's when you would have wanted to enter this. So you would have entered in for a buy anywhere around about here. Stop loss down here, you probably put it lower than the most recent tail that you've had. So stop loss you'd be looking probably around the 732 level. And a take profit, you might either use this here as a level, so you might have exited around about here, or any of the further levels. Then it's gone up quite a bit further, so well done if anyone did stay in for that long. But anywhere around about here would have been a good initial exit point. If you had entered say around 736 and exited here at 742, you would have made 60 pips on that trade alone. So all we're trying to do is finding levels that the currency pairs are bouncing off, drawing in your levels of support and resistance and trading around them. Stop loss on one side, take profit again, don't be too greedy with it. And we're just after these movements. I mean, the other one that we can look at, looked at over the last couple of weeks, is gold. We spoke about that 1260 level, how it's, you know, been quite significant in the past. You can see here it's bounced off it. This is back in February, then throughout March and April played around it. Again over here, and then just most recently gold had a rally, played around there, pushed off it, so it's still acting as a resistance, hasn't quite turned it into a support just yet. Again here, pushed off it once again, so well done to anyone that spotted that and sold it off here. Stop loss up the top, take profit down the bottom, and then once it finally does break it, that resistance will become its support. Alright traders, hopefully that was helpful and picked up a few tricks there, and we'll tune in next week.